Hello and welcome to another episode of Cardano World. Today we're going to be discussing a newly developed announcement by Ken Olling, the founder and CEO of MELD. MELD DeFi, DeFinance, decentralized finance on the Cardano blockchain. And he's going to be talking a little bit about kind of the newer exciting developments in crypto now is tokenization of assets and things like that, tokenization of real estate, tokenization of treasuries and bonds and such. The high yields of government bonds have also captivated digital asset investors, discouraged by low lending rates and last year's bankruptcies. Hence, a slew of platforms have come up with a way to offer access to them on the blockchain in the form of a token. The first and largest offering, investment giant Franklin Templeton's Franklin On-Chain U.S. Government Money Fund, which gives other tokens on other blockchains representing one share, grew to 276 million in assets as of the end of April. This almost triples the deposits in early January, representing other tokens on other blockchains. The new challengers are quickly catching up in the market share. Other companies have tokenized products both open for investors in January and each backed by a short-term government bond, have raked in $132 million and $72 million in funds so far, respectively. Now, this ad that I'm reading from is from May of 2023, so it's a little old, but we're still kind of in the ballpark here, and I just wanted to throw it in to kind of get a little better basic understanding. Money market funds are traditional investment products that hold short-term government securities and other relatively safe way to earn a yield. Investors have been flocking to these funds for their perceived safety from failing banks and their 4 to 5% interest rate offering. And today those interest rates are a little bit higher than 4 to 5%, I think. So let's jump right in here and listen to Ken Olling, the CEO and founder of MELD.
Some of the topics we're going to unpack, but let's start off with the treasury markets, because we've seen a significant shakeup there in the US government bond market, the 10 and the 30-year bonds climbing to their highest peaks in over a decade and a half. The yields there, they have reversed since then, but the market's been on edge, especially following some turbulent bond auctions recently, not showing it as real.
The trick here is the legal framework involved in the custody or holding that asset, or basically connecting those tokens that are out in the open market back to the treasury. So these are some of the challenges that a lot of businesses have been trying to solve over the past 18 months. And we're now seeing a lot of the fruits of that work come to fruition, where you have tokenization of real estate on a scale that we haven't seen. And you're starting to see the tokenization of US treasuries. You've already had many bond issuances as tokens. And now we're starting to see an appetite in the market, both among private investors, but also among institutions. Institutions see it as a method that is more efficient than the old way of going about it. Their assets are more liquid. They can trade them on more markets more quickly. And private investors see the value in getting access to assets that they've never had access to.
All right, let's unpack that a little bit further. So when you tokenize a treasury, I mean, what does that mean? Does that mean that you are buying a token that represents a US treasury? Is it somewhat like a spot ETF that they have to own the underlying asset? What does that mean exactly?
Yeah. So when you tokenize an asset, you have to be in custody of that asset in one way or another from a legal perspective. And then once you have the custody of it, you have the right to be able to break it up into smaller pieces. Some people break it up into lots of very small pieces. Some people connect it to big elements. So for example, if you have a $1,000 treasury bond, then it'll be broke up into $1,000 units, but you can also break it up as small as dollars and cents. So it's up to the person who's breaking that traditional asset up into pieces, how they do it. But effectively, they are in control of it. And then they issue tokens based on a specific set of contracts that other people can go and buy, or they can hold themselves. And when you own that token, then you have partial ownership of that underlying asset and partial ownership of the underlying yield of that asset.
So in the case of the US Treasury,
also break it up as small as.
So that's Ken Olling, CEO and founder of the DeFi protocol MELD on the Cardano blockchain. And I'm going to read a little bit down below. Michelle McCory, lead anchor and editor-in-chief, Kitco News, interviews Ken Olling, founder and CEO of MELD, who says that a panic level price rally is coming in Bitcoin. This is November 14th, 2023. Olling weighs in on the latest speculation around the spot Bitcoin ETF approval and gives his price forecast for 2024 and 2025. He discusses the latest crypto trend with tokenized treasuries amid spiraling debt levels. Olling also explains how the U.S. government became one of the biggest Bitcoin holders and the risks associated with that. MELD is a decentralized global bank providing cross-chain lending, borrowing, and staking. Get early access to the MELD app and receive a guaranteed airdrop of MELD. Sign up here, and there's a link below to do that. The tokenization wave. The tokenization of real-world assets such as government bonds has emerged as one of the hottest trends in crypto this year. Again, this is from May 2024. Banking giant JP Morgan called it the killer app for blockchain, while Bank of America said it's a key driver for digital asset adoption. Tokenized money market funds are especially in demand among those who hold large amounts of stablecoins, a large token version of US dollar cash. These include digital asset investment funds, crypto companies, and decentralized autonomous organization DAO treasuries. And that's about it. So I hope you find this interesting, and that's all I have for you tonight. Thanks. Talk to you later. Yep.